This is your technical update from the LMAX Exchange Research and Analytics Desk for Tuesday, May 3rd, 2016. Euro dollar. So the euro continues to extend its rally impressively, breaking above critical barriers at 115. This now puts the focus on next key resistance in the form of the August 2015 peak at 117.09 further up. If we break above that level, it will be a significant medium-term development as it will signal a potential structural shift in this market. But until then, there's still risk for the euro to stall out, especially with daily studies now tracking in overbought territory. So it is possible that any rallies additionally today towards the 116 area could be met with some formidable resistance. But overall, we would need to see a break back below 112.17 to officially take the pressure off the top side. Sterling dollar. So cable continues to extend its impressive recovery, with the market now establishing or trying to establish back above some recent resistance around the 146.70 area. If we see a close above 146.70 on Tuesday, it will do a good job of potentially opening the door for more significant upside over the coming sessions. At the same time, if the market stalls out here and is unable to close above 46.70, we could see a reversal and a bearish resumption. Look for a break back below recent support, which comes in around 144.75 to strengthen the bearish outlook. Dollar yen. So dollar yen shows no signs of let up just yet, with the market now breaking down below most recent support at 106 to trade to fresh 18-month lows into the 105s. Clearly the focus now is on a test of psychological barriers at 105, though ultimately with daily studies starting to look extended, we could see some form of a corrective bounce. The market would need to break all the way back above 111.89, however, to take the immediate pressure off the downside. Euro Swiss. So Euro Swiss continues to be very well supported, with the market focused on a break back above recent resistance at 110.24, which would open the door for a fresh upside towards that multi-month high at 112 further up. At this point, any setbacks should continue to be very well supported, with only a break back below 108 to really compromise the recovery outlook for Euro Swiss. Aussie dollar. So some sharp setbacks in Tuesday trade, with Aussie already putting in a bearish reversal day and a bearish outside day formation. The market is now focused on a retest of recent support, which comes in at 74.77, with a break below really required to take the official pressure off the top side and open the door for an acceleration to the downside. At this point, the market has recently stalled out by 2016 highs at 78.35 and could be in the process of carving out a top. Again, we would need to see a break below 74.77 to really strengthen this outlook and accelerate declines. Dollar CAD. So dollar CAD continues to trade just off its recent 2016 low at 24.99, but there is signs that with the market now extended to the downside, we could see a corrective bounce over the coming sessions. Ultimately, though, this market would need to break back above 129.90 to take the pressure off the downside. Kiwi dollar. So Kiwi has seen another stalling out above 70, with the market most recently stalling also just shy of its recent 2016 peak at 70.54 and reversing lower back below that 70 barrier. At this point, the medium-term pressure does remain on the downside despite these gains that we're seeing in 2016, but it will take a break back below 67.59 to officially put the pressure back on the downside. But in the interim, look for any rallies to continue to be very well capped above 70 and towards 71. SPX 500. So the S&P 500 continues to show signs of exhaustion on rallies above 2100, and this most recent rally in 2016 above 2100 has stalled out shy of those 2015 record highs, and it looks like to be rolling over. At this point, if we see a break back below recent support from this week, from last Friday, which came in at around 2050, this should accelerate declines towards next critical support around 2020 further down, below which will strengthen the outlook for a potential bearish resumption back towards the 2016 lows at 1808. At this point, only a break back above 2112, that recent high that we saw, would negate the potential topping outlook for the S&P 500. Gold. So gold continues to show signs of impressive recovery over the past several weeks, with the market stalling just shy of that 2015 peak at 1307 from January of 2015. But any setback should be very well supported in favor of that next upside extension eventually through the 1307 2015 peak and towards the 1400 area further up. Ultimately, only back below previous resistance, now turned support at 1190, would take the immediate pressure off the top side in this newly adopted bullish outlook for the gold market.